Good morning, Ruben.
Morning.
You've just come hot off of the first panel debate of TradeTech 2012.
Yep.
Obviously, we were talking about the role and impact of capital markets on society. It's a huge topic, obviously, and particularly poignant right now. What were the key talking points from that?
From my point of view, I think the most important one is that financial markets don't operate in a vacuum. What that means is we operate in society, we need to respond to the politics of that society. Right now, following the crisis, people have thought that the financial markets have been essentially the cause of the crisis. And my view about that is that's true, but only as far as it goes. I think that there were many different causes of the crisis, many aspects, industry, finance, regulation, government were all causes of the crisis, but we in the financial markets played our part in causing it. And as a result of that, we need to do two things. First, we need to explain what it was that we did and what it was that we didn't do. And second, most important, where we as an industry made mistakes, we need to raise our hand and say, this is how we can make it better.
And do you think that's something that then people are so far not coming forward, or do you think now that there's been that kick in the proverbial backside, that people are seeing the backlash, that people are maybe taking a stronger stance now and saying it's okay, we will admit that we did wrong, now we can move forward?
I think there's still a huge disconnect between what, if I could use this word, society and the politicians think of financial markets and what those people in financial markets think about themselves. I think there's a huge disconnect. So we were talking about it, and my German colleague was saying that if you went to the parliaments in France and Germany and asked them, do they want a financial transaction tax, pretty much all of them would say yes. If you ask them, is high-frequency trading bad, pretty much all of them would say yes. But if you ask them, what is high-frequency trading, most of them would say, don't know. It's just a demon that we need to address. So there's that huge, big disconnect.
Is that possibly to do with maybe the changing nature of people in the finance industry, that to some degree they are becoming more and more part of, they're technologists, they're programmers, they're people working on algorithms, the kinds of people that maybe are very, very good with detail, very, very good at understanding, but not necessarily so good at expressing what these issues are and making them something that people like politicians who haven't been trained in finance and the public who, of course, also haven't been trained in finance can understand and get their heads around.
I think the answer to that is yes and. So the first reason why it's yes is I absolutely think that we in the industry tend to get too engrossed in the details, whether it be tech or operations or regulatory. The details start subsuming everything and you get all absorbed in that, and most people, including politicians, don't understand that. The second reason for the disconnect, however, is very much to do with the crisis. We've got a huge big problem. People don't like the results of it. They're looking to blame somebody. Who can they blame? Well, we stand up nicely.
So obviously, we have the regulators on the one hand saying we want to be in control, we want to make sure that we look at the wider society picture and make sure that fits in with what you're doing. But equally, the bankers are now saying, well, we know what we do, we know how to make markets run best, let us do that, and you take care of the loopholes, you take care of the issues that are causing you problems.
I think the trend has to be away from self-regulation to regulation. So we are seeing much greater intervention by regulators in all spheres. The key cause of that is the financial crisis, and people have needed to respond to that. Regulators and politicians have needed to respond to that. So we're seeing a tsunami, a huge wave of regulation coming all over the shop, and with that will come overload and inconsistencies and a range of different problems. That said, my view is that there are still strong merits to self-regulation as opposed to statutory regulation by a regulator in a range of different contexts. It's very difficult to make that argument now because all the people who might be doing the self-regulation are demons in the public eye. So then do you want to ask a demon to regulate its own industry? No. But my view is that we will see problems with statutory regulation to which people are being blind at the moment.
So there are some of the comments that I've been hearing from the people within the financial industry seems to be very much at odds with what the regulators are saying. And as much as they keep saying, we want to have our voice heard, we know how markets are going to be run best and most efficiently, we know what needs to be done, and they're not listening to us. Conversely, when you speak to the politicians, to the MEPs, they keep saying the same thing, which is, we want you to come forward, we want you to tell us what's wrong so that we can then go ahead and regulate for that. Why do you think there is such a strong disconnect?
I think there are a range of aspects to that problem. The dialectic between regulator and regulatee, the person being regulated, has always been complex and it will remain complex. I think we are in a much better place now than where we are before in terms of regulatory process in Europe. Things are much more transparent, there is a lot more consultation, and there's a lot more access. So that's much better than what it was at the past. That said, however, we are in a very difficult place in society at the moment, and that place is we've got a huge big crisis which has raised very, very many problems and has also given rise to a huge big political movement against the financial sector. Regulators are not immune from that political input. So what happens is, yeah, they want to listen, but in no way do they want to be seen to be captured by whichever industry group it is. And that's why perhaps industry felt that it may have had more influence in the past. Right now, regulators and politicians are responding to the cries on the street. Do something about it, tax them, get their house in order. That's what they're responding to. They're not that interested in the industry concerns.
So is this another problem with the potential problem with the regulations, that they're knee-jerk reactions?
Absolutely. We're going to see a surfeit, an excessive regulation, and I can absolutely guarantee you that X% greater than 27% will lead to exactly the opposite outcomes from what is anticipated.
So we now may be at a very different type of crisis, which is a crisis of bad regulation, where if we don't, as an industry, speak up loudly enough and get our point made concisely enough, that actually we're going to be responding to the wrong things, or the regulators will be responding to the wrong things, and the next thing you know, we'll have badly regulated markets.
Well, I absolutely think that is the case. Let me be explicit. I am not anti-regulation, on the contrary, and I think we have learned a lot from the crisis to which we need to respond via regulatory manner. So both of those are important. We've got to learn, and we are learning. But are we going to have too much? Absolutely. Is it going to lead to conflicts? Absolutely. Is the industry able to do anything about it at the moment? Probably not. It's a tide against which it's fighting.
Well, hopefully the picture will be rosy in that. We're almost out of time, but of course, I just thought we don't normally do plugs on TradeTech videos like this, but you have got a book coming out. Please tell us a bit more about it.
Absolutely. It's a new book called Running the World's Markets, the Governance of Financial Infrastructure. This is about how you should run, how you should govern financial infrastructure, exchanges, central counterparties, and CSDs. These are the backbone of the markets, and because they affect everybody, how they are run affects everybody, and this book examines how they are run and how they should be run. Thanks for the plug.
My pleasure. If people want to find out more about it, where can they go?
Princeton University Press.
Excellent. Well, thank you very much for your time, and enjoy the rest of the conference.
Thank you so much. Cheers.